This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, February 8th, 2016. Euro dollar. So despite some setbacks off recent recovery highs, the euro still remains constructive following the break of that key resistance at 110.60 last week. Any setback should now be very well supported by that previous resistance now turned support in favor of the next higher low and fresh upside towards a measured move upside extension in the 114 area. At this point, only back above recent lows that we saw last week around 109 would take the immediate pressure off the top side and put the pressure on the broader downtrend. Sterling dollar. So cable has done a good job of recovering in recent trade, with the market extending the recovery last week off those recent 40-80 multi-year lows all the way up to 146.68 about ahead of this latest minor pullback. Though the recovery still is intact and there is risk for additional upside before the market considers a broader downtrend resumption, and the risk is for a move back towards the 148 area, which coincides with a key 61.8 Fib retracement off of the recent high that we saw, that December high down to January low move. Dollar yen. So dollar yen has seen some intense setbacks in recent trade, with the market trading all the way down just shy of that recent 115.97 multi-month low. At this point, the pressure remains on the downside and there's risk for additional weakness below 115.97, which would open a move down towards the 112 area further down. At this point, any rallies are classified as corrective, and only back above 122 would take the immediate pressure off the downside. Euro Swiss. So despite some recent setbacks in Euro Swiss off fresh multi-month highs, the overall structure remains highly constructive, and this latest round of weakness should be very well supported into this previous resistance now turned support at 110.50 ahead of the next upside extension beyond recent highs at 112 and towards the 114 area further up. Look for any setbacks to ultimately be well supported into the 109 area if we do see a break below 110.50, with only a move back below 107.15 to compromise the highly constructive outlook for Euro Swiss. Aussie dollar. So Aussie recovery has been impressive over the past several days, though the market has shown signs of stalling out now ahead of some key resistance in the form of a 78.6 Fib retracement at 72.65. The market could be looking for a lower top now in favor of the next bearish downside extension back towards the recent multi-year low at 68.27 and towards 65 further down. Ultimately, any rally should continue to be very well capped below that 72.65, 78.6 Fib retracement, with only a break back above 73.85 to compromise the broader bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has seen a nice little bounce in recent trade after the market stalled ahead of some key rising trendline support, but don't rule out the possibility for deeper setbacks back below last week's low and towards that trendline support before the market looks for a resumption of the broader uptrend. At this point, though, only back below 135 would really compromise the highly constructive outlook for dollar CAD, with an eventual upside favored back above recent highs that we saw at 141.03 and towards those recent near 13-year highs at 146.90 further up. Kiwi dollar. So Kiwi rallies over the past several days have been well capped ahead of a measured move objective at 67.70. Ultimately, the broader downtrend remains intact here, and the market is continued to be favored to be well capped into rallies ahead of the next downside extension. Key support comes in at 63.47, with a break below to open the door for a retest of the late 2015 low at 61.30, which is also a multi-year low for Kiwi dollar. SPX 500. So the S&P 500 continues to consolidate off recent lows, with any rallies now well capped. A recent break below that previous August 2015 1834 low was a significant development, as it set up the possibility for a major structural shift in this market after it had traded to fresh record highs in 2015 at 2134. At this point, any rallies are now viewed as corrective and should be well capped ahead of some previous support now turned resistance at 1993 in favor of the next major downside extension below 1811 and towards 1700 further down. Gold. So the impressive gold surge continues, with this market accelerating above 1100 and now trading up towards that critical October high at 1192. At this point, we're seeing a major structural shift in gold following that multi-year low from 2015 at 1046. Any setback should now be very well supported into the 1112 area, some previous resistance, while only back below 1070 would really compromise this constructive outlook for gold.